Good afternoon, guys. Whenever you're watching this, I hope you're well. I hope everything's going well there by you. And thank you for watching my video. This is the advice of the week, and today we're going to be talking all about retirement. So, without further ado, let's jump into it. Okay, so I'm going to hop over to my computer because I want to explain to you guys today the 27.5% SARS allowable contribution to a pension fund. I want to explain to you exactly how that whole setup works. And basically what it is SARS allows you to contribute 27.5% of your pensionable income towards a retirement portfolio. Okay, and this then allows you, it effectively is, then SARS gives you back the tax that you paid on all the money that you contribute towards your pension fund and retirement portfolio. So what this effectively means is that it reduces your taxable income, or it reduces your tax bracket, your real tax, and effectively SARS is subsidizing a portion, might be a small portion, but it's still a portion of your retirement vehicle. And a lot of people don't actually utilize this. They don't know about this. They don't know how to exactly approach this, and they don't know how to do the calculations as to how much they are allowed to do in there. So this is actually some advice that you can sit down at home and do yourself. We also have a retirement calculator, it's called a tax reduction calculator in actual fact, and that calculator specifically assists clients with doing this whole calculation, putting in your info and telling you this is how much you're actually allowed to contribute, how much SARS allows you to contribute. So this, let's jump to my computer now, and we'll quickly explain this whole equation to you.
Okay guys, so in this example we're going to be using an income of 20,000 Rand a month. So 20,000 Rand a month would be equal to 240,000 Rand per year. I almost said 24,000 Rand a year, but then you would die of hunger. So I'm sorry for that, but it's 240,000 Rand a year. Now let's say you work at a company, which is a very nice company. They contribute 7.5% into your pension fund, and you match them at 7.5% of your pensionable income. What this then means is that you are currently contributing 15% of your annual income towards a retirement portfolio. This is that one, and 15% of your annual income, which is 36,000 Rand a year, that you are already contributing, which is very nice because your employer pays for half of that. So your employer funds your retirement. Now, in a case where you do have a pension fund and the employer does not actually contribute anything, then that figure will simply be zero, and your current contributions would be 7.5% instead of 15%, if that makes sense. Taking this a step further, SARS actually tells us that they want us to save for retirement. So the whole point of SARS is, and I'm not justifying our ridiculous tax rates and all these things in this country, but SARS does actually want to encourage the individual to start saving for retirement. So because they want us to save for retirement, they're saying, but alright, 27.5% of your annual income are allowed to go into retirement contributions. It's that simple. So 27.5% of what you earn in an annual basis, whether it be, this is all the income that you taxed on. So if it's rental income that's being taxed and you're declaring that, then it's 27.5% of that plus your salary. So it's all the income you have. So, but in this example, you're just earning an income of 240,000 Rand a year. So we're saying again, 240,000 Rand a year, and SARS allows you to deduct 27.5% of that per annum, which means you are allowed. SARS actually, as nice as they are, they're saying you are allowed to contribute 66,000 rand towards your pension fund and claim back the tax that was paid on that 66,000 rand. Now, if it is a pension fund, it's very important to know that you will not get that deduction in a lump sum at the end of the term, because that is deducted monthly from the pay as you earn. So you wanna do your tax returns if you are saving in a normal retirement fund, a retirement annuity, anything of that sort. In a pension fund, you will not see any lump sum payout 90% of the time from SARS, unless there was a problem on your employer's side of things. Okay, so this means that you're currently saving 36,000 rand towards your pension. You are allowed to save 60. That means that SARS tells you you can save an additional 30,000 rand per year in a retirement vehicle. Now, this can be anything. This can be a pension fund, it can be a retirement annuity, as long as it is compulsory money. So, just before I continue, I want to explain to you exactly what the difference is between compulsory money and voluntary money. So, voluntary money is if you put your money into something like a unit trust investment or a normal savings in the bank. It's money that can be accessed. Very simply put, it's money that does not have the 1/3, 2/3 rule. And the 1/3, 2/3 rule is very simple. It is when you reach the age of 55, you are allowed to withdraw 1/3 of your money in cash, and the other 2/3 need to be invested to provide you with an income. I'll deal at a later stage with how you can invest the 2/3 at retirement, but right now I want to focus on actually saving to get there. So you are allowed to withdraw 1/3 cash, 2/3 have to stay in an income fund, if that makes it all sense. So you are allowed to save an additional 30,000 rand per year in compulsory money. This is 2,500 rand per month. So normally what people do is they take out a normal retirement annuity. Normal retirement annuity for 2,500 rand a month. So they're saving the additional 30,000 rand a year. That means that on that 30,000 rand, you should look at a tax rebate, provided you're on an 18% tax bracket. This is just for an example. Each person's tax bracket is different, but the principle remains the same. So because you're already benefiting in a pay-as-you-earn sense on the 36 that's going towards your pension, you're not going to reckon this into this equation. So you're saving an additional 30,000 rand a year, and you paid 18% tax on that money. So 18% of 30,000 is 5,400 bucks. This means that SARS is going to look at your things and they're going to say, but we charged you 5,000, we received 5,400 rand from this individual, and we should not have taxed that 30,000 rand. So I hope this makes sense to everyone. So they saying we will not tax any money that you're saving towards retirement. This means that you will now get 5,400 at retirement. Does this make sense? At your tax rebate at the end of the year. So effectively you put in from your side 30,000 rand. That was your contributions. And then SARS came and they said, but we'll give you that rebate. So now what I do with my clients is we take that rebate and we add it as a lump sum also towards a retirement fund, or a liquid fund, or children's education, whatever. That money is voluntary. That money you can do with whatever you want. But I always say put it towards retirement, because that is how SARS actually funds your retirement. So you got 35,400 bucks in a retirement annuity, without, while only putting in 30,000 Rand. That's effectively a first year growth of 18%. Now bear in mind that next year you won't get 18% growth on that same 35,000 Rand. You'll get market returns because SARS won't give you a rebate for money you put in the previous tax year. Makes sense. But that's an 18% return in year one, which is unbeatable. And this is any company, this is a SARS allowance. And the thing is, if you do not have a retirement annuity, if you're putting everything into your pension, then you're wasting this money, because now you've got more money on a monthly basis, but you're not benefiting long term from the refund. And this is why I'm saying it's crucially important for any individual to have a retirement annuity of their own, because it makes it so much simpler for them to actually manage the money, for them to have the self discipline to have SARS pay for your retirement. It's all about that self-discipline, because you're not going to put money away. You're not going to put away 18%. Let's do the math. So times 18%. That one, and then you say, okay, that one divided by 12. You're not going to save $540 a month if you're barely buying food. Because with 20,000 in a month, whether we want to know it or not, times are tough. Times are tough, and $540 is a lot of money. So you're not going to save $540 that SARS is actually already giving you back on a monthly basis. Chances are very slim of this. But if you get a lump sum, it is a lot easier to say, but SARS gave me 5,500 Rand, I want to add it to a liquid portfolio or whatever. So that is the benefit of a retirement annuity. There's other things like it is protected against creditors, but those are external benefits. The biggest benefit of a retirement annuity is, as you can see, that it is the fact that you're getting 18% return in year one on all savings, which is amazing, guys. It is absolutely amazing.
So as you guys can see, and I tried to make this as simple as possible. I really did. But as you guys can see, if you play it right, if you really do it right over a 40-year term or a 30-year term, then it does actually make sense to save in a retirement portfolio. Now, you need to understand me when I say this, because I don't just say it to say it. But when saving in a retirement portfolio, if you decide, I want to save for retirement, you got to think as well. You got to think that this money is only accessed at 55. So it doesn't help you saving thousands and thousands and thousands of rands for tax purposes in a retirement annuity. And at the end of the day, if you're 45 years old, you're sitting with a bit of a problem, because now you need liquidity and you just don't have the money. You can't access that money. So you need to find the balance as well. You need some sort of liquidity savings. You need to put some money away for rainy days. But this money, retirement savings, is long term. So you need to find that balance, and that is where a financial advisor has to use discretion as well. So that is why it's important to chat to the right financial advisor. I say this at the end of every video. You need to chat to the right financial advisor. So whether it's my offices or whether it's your own financial advisor, if you trust the guy, if you trust the lady that's assisting you, it's brilliant. But you've got to listen to them as well. So I want to thank you for watching. You're welcome to check out my other videos on my YouTube channel, Charles Greiling. It's all on there. Also on my website below, you will see a link to all of my previous videos. It's all on the app, which you can view there. And you're more than welcome to contact us with any questions or concerns that you might have. We'll be more than happy to answer that. And also down there you will see a link to the financial calculators, which you can download and use on the app. And that is quite beneficial. It's not only the tax reduction calculator, which is an example of what you saw today, but it's also how much you need to save, regardless of how much tax, regardless of how much SARS actually allows you. And it's savings calculators for educational purposes. It's those sort of things. So you're welcome to check that out. Follow me on Facebook. I'm very much out there. I'm very approachable. So I look forward to hearing from anyone that has any questions or any concerns. And I hope that this video was beneficial to you. Please share it. Please like. And I'll see you guys next week. We will further discuss the topic of retirement, because there is other things to discuss other than just the tax side of things. Next week we are going to be looking at what to look for when it comes to the products surrounding retirement, because there's a lot of things going around out there, and the choices are just so massive that at the end of the day you're probably just going to take whatever your financial advisor gives you, and they're just going to give you what they get the most commission on. So please stick around, look out for what to look out for with retirement portfolios when choosing what retirement vehicle to use. But we'll chat about that next week. I thank you for watching and have a good evening. Cheers, eh?